below about that 56.30 support level. So I think, if anything was going to happen, it quite possibly would have happened already by now. And I think, if you're not faint-hearted, the market right now is providing you another opportunity to be a buyer down at that support level. We're already seeing a little bit of it today, although some of that will be discounted by the fact that, as you guys said earlier in the lead-up, it is the end of the month, so we might be seeing some end-of-month shenanigans.
You mentioned there, not for the faint-hearted, but potentially some buying opportunities. Where in particular, Chris?
So I actually added CBA this morning for my clients. So it's partly an index play, being down at the bottom side of that range. I think CBA is also oversold. We all know about the AUSTRAC and APRA, regulatory issues that the company is having. I think underneath all that, CBA is still a very, very strong company. Posted some solid results in the latest set of numbers. So I think just as a short-term trading opportunity, as I said, technically oversold, matches up with the index being oversold. I think we can see a bounce there in the next couple of sessions at the very least.
Yeah, it's up about 0.5% there today, 75.72. Adam, your thoughts on CBA and whether it's an opportunity at these levels?
I did the same this morning. I've been buying for a couple of clients. We're just sort of dipping our toe back in there. They were ringing at sort of $78, and I said, no, let's just wait. I want to see a little bit of stabilisation. Not that this is stabilisation, but I think it's a good call. I've been doing the same thing today. It's our best bank and oversold.
Yeah. Okay. Chris, perhaps we can delve into some of those details there today. Some of the companies that have reported, obviously the last sort of big day or main day of reporting season. Webjet, a big bounce for those shares, were up over 6%. Looks like this result really sort of backed up that strong track record that we've seen in recent years. What did you make of that result from Webjet?
Yeah, look, the results, the numbers themselves were very impressive. A huge statutory, a lift in statutory net profit, circa 150%. Some of that was due to the sale of the Zuji business for circa 28 million, but even profits from continuing operations were impressive. And revenue was up circa 40% as well. So, look, I couldn't agree with you more, Leanne. A strong set of numbers from a company that has done pretty well over a recent period. The only caveat I have on this one is their acquisition of Jack Travel for some $330 million. It's a big acquisition. It will make the company the second largest wholesaler online of online travel in the world. So it's a big opportunity to absorb. I'm not saying the management can't do it, but I would like to see some evidence that they're absorbing that business well and performing strongly before I would jump back into this one.
Back in, a couple of years ago, those shares had languished, and I think a lot of the concerns had come from the Airbnb business and what impact that was likely to have. But it does seem like they've done a pretty good job, haven't they, of tackling some of those competitive pressures?
Yeah, they have, and I noted the comments today from their CEO saying that what has been good for Airbnb has actually been good for their business as well, because it's just increased the overall volume of travel, and maybe pried some people off the sidelines who previously weren't willing to travel, and getting them in the market. So, yeah, look, it is a business and it is a management that has navigated all those waters particularly well. And like I said, with the Jack Travel acquisition, it's not to say that the management can't do it. I just think because of the size of the acquisition and what they're trying to achieve, you just want to give this one a little bit of room to make sure that they get it right.
Adam, what's your thought? Obviously, as Chris pointed out, Jack Travel was sort of central to that growth strategy. Do you see that growth continuing for Webjet?
Yeah, look, I do. I mean, it's certainly growth by acquisition, really, at the moment. We're not seeing that sort of organic growth moving forward, but growth by acquisition is okay. I think it's great that we're talking about the growth side of things instead of getting really distracted with all of the accounting issues that we saw with Webjet, with Thomas Cook Travel and whatnot, sort of 3 weeks ago, 4 weeks ago. So I think that's great that we're moving on. The stock price is starting to reflect that as well. So we've got a buy on it at Shaw's, and we like it.
Mm-hmm. All right, whilst we are talking within the travel space, perhaps we can just touch on Qantas, because we've heard that news there today from Qantas. They are leaving Dubai behind and they're going back to Singapore as its stopover hub for its daily Sydney to London services. This comes just 5 years after the airline changed its hub from Singapore to Dubai. Singapore proving to be a popular port of call for tourists and business travellers. It's part of a 5-year extended partnership with Emirates, and Qantas CEO Alan Joyce saying that the move will keep up with growing customer demand and new aircraft technologies. The airline also announcing the existing daily flight from Melbourne to Singapore will be upgraded from an A330 to an A380 Airbus. The service, which will come into effect from March next year, is subject to government and regulatory approval.
Frees Qantas aircraft up to expand into Asia. Out of this, we'll be able to add a Melbourne-Singapore A380 every day, a Sydney-Singapore A380 every day. It'll go on to London, and it'll free up an additional aircraft for us to expand in Asia. That's where the growth is. That's where the profitability is. That's part of our big changes to the international business over the last few years, and our continued focus on using our existing assets to expand our Asian operation will add to our bottom line. And we said from financial year 19 onwards, this will produce benefits of over $80 million to our bottom line. So this is a very positive announcement for our shareholders.
Chris, I just wanted to get your thoughts on that, what that potentially means for Qantas growth going forward, obviously moving that stopover hub now back to Singapore.
Look, I can only speak anecdotally on this one, Leanne. I'm at Changi Airport there in Singapore is one of the best airports that I've ever been to. I think it's well renowned as one of the best airports in the world. And when you look at the context, the geographical context of where Qantas's growth is likely to come from, it is of course in the Southeast Asian region. So it makes sense that they would have a hub there, the best airport within that region. Like I said, it's only anecdotal, but it seems to make a lot of sense. And Alan Joyce, as you heard there, talking about the benefits that will come from that move. So yeah, I like it, and I can't see any problems with it.
Adam, your thoughts, should shareholders sort of read into this move all that much? I'm just noting there's not all that much of a change in the share price today.
Yeah, I think it's more incremental that we'll see this, and as Alan Joyce said, it's a 2019 story really for that. So they have to position the business and they have to position for growth. So I think it makes sense. I'm a little bit of sceptical up here with if Qantas can continue its run up here. I'm always a bit sceptical of airlines and never really been a large investor in them. But I think this is positioning them for the future. So I think it's a great announcement.
Yeah, I mean they're subject to that volatility, aren't they?
Yeah.
Obviously in the underlying oil price and so forth. But you also wonder maybe the best has sort of been and gone now, given that transformation strategy.
I agree. I mean the pay to div, that's great. They're still talking about growth, which they need to. But yeah, at sort of 550, where are we? 566 at the moment. I'm a little bit hesitant up here to be dipping my toe in.
Would you be reflect a similar thought, Chris? 566, a bit hesitant up at these levels?
Yeah, I would think so. Look, it has had a very charmed run. So yeah, probably a little bit overbought.
Okay. All right, let's move back, Chris, to one of the other stories, of course, that we were watching there today, and that was NextDC. Shares, pretty good pop, actually, for those shares. Again, like all of these companies that have reported, big focus on the outlook for FY18. What did you make of the numbers for NextDC?
So this one for me, absolutely, Anne, was all about the outlook. So the numbers today came pretty much in line with expectations. The outlook, though, came in ahead of expectations, or at least where the street is. So it might cause some analysts to upgrade their outlook. The reason for that, the company announced or suggested it was rising energy prices, but also, of course, the fact that they're reinvesting back in the business. They're going to buy those operating sites back off the Asian Pacific data centres. So it was really nice to see or to understand that the company believes that revenue can continue to grow strongly, and that's reflected in the fact that their utilisation rate is high and growing, and that demand for cloud services, of course, which is what it all comes back to, is growing as well. So you think that they're setting themselves up nicely by reinvesting back in the business now, looking to take advantage of growth in future periods. So that was really the main thing out of today's results for me, was the outlook and what they plan on building and growing.
So would you stick by this one, 446, if you're not a shareholder? I mean, would you be getting in at around those levels?
Yeah, we've got a buy on it. The long-term guys that I work with, they've had a buy on it for quite some time, and even from a shorter-term perspective, which is where I operate from, I wouldn't be worried about buying it at these levels right now.
Okay, Adam, your thought, as Chris rightly points out, obviously the underlying momentum there for cloud-based, services continues. What did you make of the result for NextDC?
Yeah, again, I mean, I think they reported some good revenue numbers. The EBITDA was in line, and they had less capex to what they guided to. So, I think all of that is sitting well for the 2017, 2018. Revenue is in line with what the market was saying, and EBITDA is around that sort of 56 to 61 million. So I think that sits squarely with where the market was looking at 60. So it's business as usual and continuing on, and they're looking for a little bit larger on the capex numbers, 220 to 240 million. So they're going to be spending a lot of money in the business. But again, this is one of those ones where data is going to consistently go one way, and these guys will be the benefactor of that data increase.
Mm-hmm. Okay, excellent. Chris, just to kind of finish up there, and you mentioned CBA, which is one you've been, buying. Now that we're sort of through reporting season, you've obviously had a chance to delve through the reports. Things have kind of settled down, I suppose, for a number of these stocks. Where else are you looking at? What are you buying or holding at these levels?
Yeah, so the only other thing that we hold at the moment, Leanne, is Aristocrat Leisure, and that doesn't report until November 30. It does have some lofty expectations in terms of revenue and profit growth, but I think they can be met. One of the major reasons for that was their recent acquisition of Plarium, the Israeli social gaming network company, which they're really looking to monetize. It cost them a hefty penny, $640 million. But the company has a really, really strong track record of absorbing these acquisitions and squeezing money out of them quite quickly. So Aristocrat is one we like. We're looking for a target there around $28, but like I said, a lot of that will come down to how they report November 30.
What have you made of reporting season?
Look, I think probably like everyone else, slightly disappointing. Outlook statement's a little bit disappointing. It certainly could have been better, but again, for me as a pivoting back to technical trading, which is what I look at, it hasn't been bad enough for the market to break lower. It obviously hasn't been good enough for the market to break higher. So I think we got what we deserved, and we're about where we expected to be, and that's purely reflected in the index.
Okay, excellent. We might leave it there. Chris, it's been a pleasure as always talking to you. Thank you so much.
Thanks, guys. Cheers.
As Chris Conway joining us there from the Australian Stock Report.